Hey everyone, QuantumScape was making headlines today after yesterday announcing that it's proposing a public offering of Class A common stock. So QuantumScape intends to offer $300 million of shares of its Class A common stock just to use the money for working capital and general corporate purposes. Also, QuantumScape intends to grant the underwriters a 30-day option to purchase up to an additional $45 million of shares of Class A common stock, less underwriting discounts and commissions. So total sales could reach $345 million worth of QuantumScape common stock. Now, it seems like this deal would be 300 million if the stock price falls and stays below the offer price for 30 days. However, if the stock price rebounds and goes higher, the company that holds the option will likely exercise that option to buy the $45 million worth of shares, because they're going to get the shares at the offer price, not at the higher price. So they're getting a nice option here. If things work out well, they will buy that $45 million. If not, they will not exercise that option. So not surprisingly, QuantumScape's stock price fell on this news. Typically, that's what happens when you get a stock price, when you get a stock offering, the stock price typically falls for a few reasons, but one of the reasons which I want to talk about is because of the negative signal that it sends to shareholders and investors, right? So if you think about, management is making the decision to sell more of the company to the public, and arguably nobody knows more about the prospects of QuantumScape than its management, right? The board of directors, the CEO, the CFO, nobody knows more about the company, its prospects, and its value than those folks, right? And if those folks are deciding to sell, what type of signal does that send to the market? It tells the market, maybe this management team thinks the stock price is overvalued, and so they're selling it now that the stock price is high, while they have the opportunity to sell because they think it's overvalued right now. They think it's a good time to sell. So then stock market participants take that signal and say, maybe we should sell too because management is selling. And so it sends a bad signal when management makes this decision to sell their common stock. Now, I'm not saying that's what management believes. I'm not saying that they believe the stock is overvalued, but it just sends that signal because of what I mentioned earlier. They know so much about the company, and they have options on how to raise money. And if they're choosing this option, which sells the stock, then it sends the signal that they think it's overvalued, right? And if you look at the price trends over the last 3 months, it kind of makes sense, right? The stock price was hovering around $6 per share around May, and the price had exploded to over $12.50, especially after the latest earnings report where QuantumScape announced that it made major progress and hit a major milestone in the development of its solid state batteries. And so the stock price went higher on the back of that news, and it seems like management said, okay, this is a good time to capitalize on the enthusiasm from investors and announce a share sale. Although in that video I recorded a video that might be published after this one, but I recorded it before this one. And what I said in that video is that QuantumScape does not need to sell stock to raise capital. They do not need money. They weren't in urgent need of money. So this stock sale that they're executing right now is more of an opportunistic stock sale rather than an urgent emergency sale of stock, which in most cases works out better because you get a better price when you're selling your stock when you don't have to, versus if you're in an emergency situation and you have to sell, then you're not getting a really good price. And here's why this matters. So QuantumScape had 445 million shares outstanding, and at the closing price, let's estimate that the agreement was to sell at $10 per share, just to make it an even number, for 30 million shares, for 300 million, which would mean that they're going to sell 30 million shares. And if the additional, we're going to leave out the additional $45 million as well. So just for that $300 million offering, they're going to need to sell about 30 million shares, which would increase the total to 475 million shares outstanding. So a little less than 10% dilution to raise $300 million. And why it's important is because if or when this company eventually starts generating profits, then those shareholders are going to be entitled to less profits per share because there's going to be more shares outstanding. Okay, so less profit per share because there are more shares outstanding. That's why it matters, and that's why investors are usually not happy about share dilution. And here's why I mentioned QuantumScape did not need to make this sale. They had, as of the latest update, 232 million in cash, and this doesn't even include the extra liquidity they have from borrowing capacity and credit lines and so on. So they had 232.8 million in cash and equivalents, and they only spent, they went through 57.67 million in the most recent quarter. So at that rate, they had roughly 4 quarters before they needed to raise capital. But management saw an opportunity to say, hey, let's raise capital now because we know we're going to need to eventually, right? They said they could go on till about 2025, the second half of 2025, before they need to raise capital. But hey, the stock price had been more than doubled in the last couple of months. Let's take this chance. Let's sell the shares. Let's bolster our balance sheet and secure ourselves more time to develop this product and get it to market. So in a cautious move from management here to sell this stock, which should not be, if I was a QuantumScape stockholder, which I am not, the way I would interpret this is as a cautious move, a move from management capitalizing on the recent share price increase and just trying to play it safe, give themselves more time to develop the product and get it to market. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.